Good morning, everybody, and welcome to today's episode of Market Check, brought to you by BB. There is no second best daily YouTube live stream to talk about markets. Happy Friday, everybody. Another week in the books. This week is a little bit different than obviously the last few months. We are in a much more strongly established trend rather than the Hotel California range that we just broke out of. Jokingly, I always would say that within the range, it's like time went by pretty quickly, right? Because you're looking at the same prices pretty much every week. But these weeks are also no exception. I feel like though there's a lot more occurring during the weeks when we have these trends, right? We've had a pretty huge week for crypto, all things considered. Elon Musk with the Department of Government Efficiency, of course. We have Pepe and Whip getting Coinbase listings, Pepe specifically getting a Robinhood listing. It's been a big week for crypto, and we're going to talk about it with you guys, kind of do a bit of a weekly recap, and of course, discuss where we think prices are headed next. But I'm Snorlax. You guys also know me as Tommy. I'm joined by Max and Louis Tuesday. On a Friday. But yeah, guys, before we can start cooking, before we can start breaking down, like I said, a little bit of a weekly recap, and of course, where we think prices are headed next. If you could do us a favor and smash the like button, we would be so appreciative, especially because I'm sure a lot of you guys have had great weeks. I'm sure you're in a pretty good mood on this fine Friday. If you could just bring your hand over the mouse, hit that like button for us. The YouTube gods, the YouTube algorithms, whatever they are, they're always very appreciative when we do that. And we can continue to grow this channel. The live viewer number continues to get bigger each week, which is really cool to see. And you guys hitting the like button is a big reason behind that. So, but let's talk Bitcoin. Let's talk altcoins, and of course equity markets, because we are seeing a little bit of red over with the S&P and the NASDAQ today. Bitcoin is kind of more or less, when I was describing it on the Discord this morning, it's in a trend, but we're within a range within the trend. Not inception, but and also not the 25-year-old technical analyzer, but we have broken out, right? We put a huge candle up on Monday specifically of this week. We've kind of been chopping ever since that happened within the range of kind of like that Monday, Tuesday move that we made. And now Bitcoin is just kind of more or less waiting to or just establishing value before eventually moving up again. Look at the high time frame momentum readings on Bitcoin. To me, this move is probably just getting started on Bitcoin. We probably have not seen the top on Bitcoin dominance, although chronologically we are likely getting a lot closer. This is still Bitcoin's market for now. And although altcoins have shown signs that they can really start to trend against the market, obviously like a Pepe, for example, earlier this week, Bonk, XRP over the last 2 or 3 days, we still do think that Bitcoin dominance will probably trade higher over the next few weeks before eventually topping out and seeing that rotation into altcoins to a much larger degree. But right now, yeah, Bitcoin's just kind of chopping, siphoning up liquidity. Altcoins are running a little bit more maybe today than they were earlier in the week. ETH is still lagging. I think that ETH is going to make sure that catching longs on it in a Bitcoin uptrend is going to be as difficult as conceivably possible. But of course, we'll talk about that as well. And of course, how can we not talk about what's happening in equity markets? Not just for the fact that they are down 1.5% today or a little bit over 1%, but that it has not really impacted crypto. Bitcoin tagged 90K this morning, and the S&P, it's really only down 1 or 2 grand from its local high of the day. So it has been thus far unfazed by equities. And I want to talk about that correlation at some point on this show, what it means for equities and what it means for crypto into early to mid-January, because it will have, you probably will see this theme continue. And like I said, that is something that we can talk about on this show. But for now, that's enough yapping for me to open. I'd love to know y'all's thoughts on the market. Obviously, it's been a pretty crazy week. A lot of developments have occurred as far as crypto goes in a bullish way, right? I mean, it's not often that a government agency names a department after Dogecoin, of course. And then the biggest meme coin in crypto of the news cycle, Pepe, gets listed on Coinbase and Robinhood. What are you guys thinking after this crazy week? And what are you seeing for the future?
Super cycle. Imminent. Yeah, pretty crazy. Like if you would have told me maybe 3 months ago, like, yeah, they're gonna name a government agency after Doge, I would have been like, yeah, you're full of shit. But here we are. Maybe more confirmation that we do in fact live in the Matrix. Just crazy stuff. But listen, I mean, it's all kind of coming together, whether that happened or not. It's all coming together. Market seems absolutely healthy. We have the wind in our sails with the new presidency coming in with Trump and just the Doge thing. It's just the icing on the cake. I'm hearing some constructive things or recommendations about possibly cutting taxes on crypto. Like that's extremely bullish. Like right now, if you're not a long-term capital gains and you're short-term, which most people are, unless you've been holding for over a year, like you're going to have to pay 20-25% on your gains. It's a lot of money. Long-term, you pay 15%, which is not bad, but it's still a nice little chunk versus if there is no capital gains on some of these tokens, like investors are going to flood the market, right? Because it's just like you can't beat tax-free capital gains. Like that's a thing of beauty. So it really does seem like we are getting the perfect storm here for the crypto markets. It's pretty crazy how it's unfolding.
If they could do the 0% income tax and speed run that for 2025, I would be very appreciative.
Oh yeah. So like that's the question. Like, do we like hold like expecting to get that, but like, is that a way to trap us as well? Like, oh, we'll wait for the capital gains, and then the bull market's over. Well after they release that law. Yeah, I don't know, but it's all. I mean, it's good news for now. At least the idea or the news of it is enough to bring more fresh capital into the market. I think.
Good news begets good news. Funny how reflexive of an asset class crypto is when it begins to trend and when it's not trending. The bad news just tends to pile up in the same way to the opposite edge. But yeah, narratives are powerful. And right now, crypto is benefiting from the biggest narrative of all, which is that you have two people effectively leading the government and on calls with all of our foreign leaders that are very pro crypto, and that has never happened before. And as long as the regime remains that favorable for crypto, it's difficult to not see immediate term price appreciation continue, especially for something like Bitcoin that's caught such a strong boomer bid over the last 2 or 3 weeks since it became a kind of, I wouldn't use the term inevitable, but a lot more certain that Donald Trump would win the presidency.
How much of his presidency do you think they're trying to price in before he takes office in January?
We will probably price in like 4 years of bullishness in like 6 months.
That's kind of what I'm thinking, as in like we're going to have like a blow off in like March, April, because the market's just going to get so out in front of its skis for this Trump presidency.
Yeah, so, as it always does. When's the actual inauguration? Because I think that could be like
it's January 20th.
Yeah, I think
it's on the 20th.
I think that's a date we should keep on our calendars.
Yes.
Maybe for a local blow off, or something like that.
Yes.
Well, so I do think the picture in equities is especially important to timing in crypto right now. I was texting Max and Tucker about it last night because I was listening to Chem Carson, who, if you guys don't know who he is, I mean, I'm sure people have thoughts about like him as a trader, but his views on the market are always very salient and valuable, in my opinion. And he was basically saying probably a slow grind up into the end of the year for these indices, into January, that is. We have really positive rebalancing flows. And then at some point, the suppression on volatility will probably lead to maybe not quite another like August 5th type of candle in equity markets, but some sort of pullback after a move probably into like 6,200 on the S&P. And at the same time, right, at the same time, you're kind of seeing these correlations break on small caps and of course meme coins as well. So narratives are going to run especially hard into early to mid-January. And like I said, what narrative seems to have probably the most staying power of any right now is crypto. So I really think you continue to see Bitcoin and crypto catch a very strong bid until early to mid-January, when maybe that volatility in equities gets a bit sticky again. But, and I want to say this part as well, because I think it's very important, and I think optimistic as well, is after you kind of have that little like wobble in January, volatility will suddenly become more unpinned, and it's more likely that you can finally end up with that scenario where the market's moving higher at the same time as volatility. We've talked about that a lot on this show. It hasn't happened yet this cycle, but when it does, that is when you should start being on kind of red alert for like what Max was saying. Like maybe people get a little too ahead of their skis. When you start seeing the market up with volatility up, that's usually when you start to see signs of caution.
Yes, definitely. But I really think that we're in this I think we're just in this like really unique window of time where when you talk about an overnight sentiment shift, you know, November 7th, everybody woke up November 7th and was like, let's ride. All right, let's go. And it's just been good news after good news after good news. And you are seeing a reignition. There is gasoline that's been thrown on this fire. And I think it's going to just continue to go for a while here. And I know there's some people talking about like stocks pulling back today. I personally am not worried about it. And we can get into why. I'll show you some charts. But Tommy, I know you were also talking this morning on our private Discord call, kind of your expectations on like the NASDAQ's bleeding a little bit. Nothing too crazy, but are you kind of expecting this to just be like a little almost dead cat bounce on vol and then just zero?
Yeah, no, I think 6,200 in January or December is kind of inevitable before you see a larger move from volatility again.
Yeah, and let me show you what. And I know you like the VVIX, Tommy, but little old me, I just like to use the old normal, the grandpa VIX. But here's the NASDAQ right here with the VIX down below. What's the best way to show this? Here's what we'll do. We'll actually move this up so we got a little bit more room to work with, because I'd love to talk about the VIX getting crushed today and explain why it's so significant. So for one, you can see here whenever the VIX spikes, guys, like the VIX spikes, we get a pullback in equities, right? You can see pretty clearly the relationship, right? That's all this market is these days, it seems like, is just vol, right? It's just vol. So what happened here was really significant. We had this, and by the way, you can do TA on the VIX. Non-believers are in shambles, but I promise you can do it, and it works, and I do it. But we are here, give me 1 second. I got to readjust my screen here. I'm trying to fit it all on here so I can see you guys and do the charts. Okay. So the VIX just like basically broke down here. And that's the exact same thing that happened over here last November. Okay. So seasonally, like the VIX really loves to be just cooked for a while here. Basically from like November, it breaks down all the way until like April, and then kind of sell in May, go away kind of thing. But anyways, in my opinion, we basically just kind of did like this little move over here, right? And we, had like a little pullback right here. Well, I mean, this is it right here. But I mean, I think what you're doing with the VIX here is you're probably just going to come back into this gap a little bit right here. And then you're just going to get hammered, right? And then you're just going to see one of these prolonged ranges where, you know, you're down in here for multiple months, just like you were over here. And you're going to see this kind of thing, right? You're going to see one of these mechanical walk ups like this. Everybody's going to be expecting, you know, lower, and you're just going to get one of these things, you know, and you're going to see the VIX just do this, I think, for a while right here, just flatline, dead, right? And then maybe, you know, we could get, you know, then we'll draw a trend line like this, and then when you peek your head above it, you know, after the breakdown like we did over here, you know, then you can, you know, then maybe we can go risk off for a little bit, you know, but I just feel like we have a lot. I think this is the phase that we're about to be in, you know, right here. So I don't know if this kind of is what you're thinking, Tommy, but this is how I see it personally.
Now, I think they're gonna smash the VIX into January. Maybe we get a little spike on it in January, maybe February, probably more likely January. They're gonna crush it again. And then I think it'll probably be floored. I don't know if it'll quite like hug the floor, but I do think it'll remain tame for probably like 6 to 7 months after that happens. But that will be very favorable for risk assets, especially you know, when the VIX is moving kind of in tandem with the indices, it tends to be pretty strong for something like the Mag 7. So maybe that is good correlation for Bitcoin whenever that occurs. But yeah, no, I thought it was interesting stuff when I was listening to Chim talk about it yesterday. But the main takeaways I had were volatility is going to get smashed in January. Pay attention in January, and then after that, it's probably like a blow off leg for equities and probably crypto too.
Yeah,
I love me a bullish Tommy, man. I love me a bullish Tommy. It's the most fun thing ever.
Yeah,
because he's the giga brain, you know, like he's the quant, you know. So when the quant just gets like euphoric and bullish and just bear posts the VIX, it makes me feel all warm and fuzzy inside.
It's confluence.
Yeah.
Bullish.
I mean, it's the classic fits my bias, I'll go with it kind of thing.
Yeah.
So.
Yeah, I mean, the whole VIX thing, it kind of makes sense, right? Because like it's like the markets don't like uncertainty, right? So like the VIX kind of slowly rising into the election, like who's going to be the president? Is it going to be a swift election? Is it going to be a decision? Is it going to be a tough transition? Like that brings uncertainty to the market, which, you know, will increase the VIX. And then once you get that decision and everything goes smooth, you know, that uncertainty drops, and then the market has that certainty, which it thrives on. So, I mean, just looking at it in just a simple context like that, you know, it makes a lot of sense, like how we've seen this pattern over and over again, as far as the elections go anyways.
And here's the thing about like the VIX spiking like this, when it went to, I mean, 65 or whatever, when you get these big vol blowouts, like look at, I'm not going to, well, let me see if I can, it fucks up the chart. Okay. When you look at like these spikes, you don't get a big VIX spike to, you know, 50 or 80 followed by another one. You get like a long compression, you know, afterwards. You know, it's falling and then you kind of redo it again. So in my view, like, you know, we're just gonna keep, like, we got some time. Like you don't like have a VIX blowout and then like another VIX blowout. You can get some big pullbacks. Like, I mean, look at what happened like over here. Right. You know, you went to 50 and then so this was in February of 2018 and then December of 2018. Wait, yeah. So like 10 months ish, you get another big drop, but you're not going to get like, I mean, unless it's something we haven't seen before, it'd be very, very atypical to like, you know, just have a big, huge vol blowout and then, you know, like another immediate one. I guess it could happen, but you kind of go through these periods of like really high volatility. You get a blowout, and then you go through a big prolonged period of compression, and then it's just the cyclical repeat. It's just over and over and over again. So yeah, anyways, just wanted to touch on that because I see people are like fearful of this little pullback. I'm like, all the macro boys took to Twitter today and they're like, all of like the big CEOs and insiders are selling and Warren Buffett's never had more cash than now and you're buying. And I'm like, yeah, Warren Buffett's a Jeet, man. He sold Apple, you know. I knew Buffett was cooked when he sold Apple, you know.
He's also like, well, he's pushing 100. Like, you should not, if you're a young man, you should not be trading and investing the same way a man who is pushing 100 years old.
And he's pushing 100 billion net worth.
Yeah, I mean, yeah, he's made his money. Like, if I made my money, I'd be chilling on it too. What, like,
bro? The reason Warren Buffett is sitting on the most cash he's ever had is because his portfolio is the highest it's ever been. No shit, he's sitting on the most cash he's ever had. And again, Warren Buffett has to take profits over like a 3 or 4 year period of time. That man is the stock market. You know what I mean? He doesn't sell and it's the top. He distributes over years.
Yeah, he's just taking profits on the way up, and people just like they find these data points, and it's like just focus on your own bags, bro. Like, what are you doing?
Buffett doesn't need to time the top and bottom exactly.
No,
for all of the reasons that you guys just said. But the people are so used to trading like their $5,000 or $10,000 books that they're just thinking,
Lars,
like, I can't imagine not being all in or all out of the market. Warren Buffett's like, well, I manage $100 billion, so it's a little bit different.
Yeah,
but
thank you for the super chat, Lars. If you want to join us today, send me a message on X and I'll send you a link. It might just be us three, and it's kind of a casual Friday, so would be fun to hang out. If you're still watching and you're free, feel free to join us. Just shoot me a message. All right.
It is funny how everybody is rushing to call the top on equities again. When in reality, it's like you said, probably like 10 or 15 minutes ago, Max, it's a dead cat on the VIX after it got crushed almost 30% in the span of a week and a half. So eventually, you have to have a bounce on these trends. And we got one today. And as we can see, the correlation between the VIX and the S&P is becoming like, it's so tight. It is so tight, which will eventually create like a beach ball underwater effect for equity indices. But that's probably a few months away.
Can we look at what like equities did when like Bitcoin first started like breaking out like old all-time highs? Because like back in that time, like I was in crypto, but I wasn't really watching equities as much back then. So I have no idea like what the stock market was doing when Bitcoin rallied from 20K to 70K in like six months. Like, do we need equities to go up, or are we okay in an equity consolidating market?
Yes, we can go up when equities are consolidating. Right now, because equities are because volatility is very well supplied, it also means we can't really go down very much either. So we're just kind of in like this purgatory until January, where we're probably just going to slow grind higher, which will mean you're going to see a little bit more dispersion into things like small caps, altcoins, crypto, Bitcoin, stuff like that. But you don't need equities to be ripping for Bitcoin and crypto to be ripping. Although if equities are dropping a lot, usually crypto is going to follow, right? So there is some level of correlation.
You kind of get that. You get the crap, but you don't get the good. Like when equities were ripping while Bitcoin was trading sideways for 6 months. So like, I mean, now that they're consolidating, yeah, like, I could see Bitcoin doing its own thing for a little while in crypto.
Watch how fast we catch up.
So look at this. So this is actually my favorite example right here. So here was the NASDAQ last Q4. So we actually had the NASDAQ pull back pretty hard here in Q4. And at that same point in time, Louis, you saw Bitcoin, even with the VIX rising, you saw Bitcoin do like the same thing it's doing right now. Like, think about this. All right. We're probably going to do like what Tommy said, like kind of like the slow grind up and then pop, and then altcoins, eventually catch like a big bid. But we had that markup, and we probably just do something like this and then kind of pop into like March. It's the same thing as last time. So, and look who we have here. Big Lars. What's up, bro?
What's up?
Can you guys hear me?
Yeah, you sound good. How you doing?
I'm doing good, man. It's been a minute. It has been a minute.
I know. It's been a minute, man. And I will say congratulations. You are the first person to ever be on Market Check 3 times, bro. You're back. You hit the hat trick.
It's an honor.
The hat trick. What up, Lars? Nice to meet you.
Nice to meet you, Louis. We're
You guys haven't met?
Not on stream. Like we talked on Twitter a couple times, but never. I was
yeah.
never on stream. I was on paternity leave.
All right.
When Lars
Daddy
came
had
on.
Daddy had home duties. I forgot.
Yeah,
All
I had baby duty.
and we're meeting again in greater market environments than last time, because it was during summer, and we were still ranging, still reaccumulating, and now we're seeing the expansion. So it's vibes are good.
I remember that, but I also remember you came on the show and you said we're gonna break this to the upside. I'm 100% confident. So
I think it was the second one. I said I'm 100% certain that we're gonna break towards the upside. So it's not unexpected, this breakout.
yeah, no, it's not, and I would say it's long overdue, man. That was a grueling 8 months. That was a grueling 8 months.
I've never seen a range like that. Like I've never seen a range like it. But the thing is, but you've never had a range like that. Like I think you had one in like 2013 that was also around 200 days, but it wasn't as profound and as detailed as this one. Not as good of a reaccumulation. But when you have a range this long and it looks this good from an accumulation perspective, then obviously you're gonna rip. Like you're gonna trend for a certain period of time until you need to consolidate again to for the next leg up. So I noticed already that we were starting to pump, and not just people on my socials, but also like friends that were holding Bitcoin like diamond hands since 2017 were like, should I take some profits now? Everyone talking about taking profits, and I'm like, man, let this thing go, let it rip. It's gonna take some time before we get our next big range.
And I'm seeing so much of the same thing, man. And I think a lot of it is like the 8-month range did psychological damage and tormented so many people. They just can't wait to get out of the market because they don't want to feel that pressure again. But if there's one thing that I know, and of course you guys know this as well, is that there's a much greater probability that when you break out definitively, powerfully, and pronounced out of an 8-month reaccumulation, you typically don't reject immediately. You typically get some froth right after that. So
it's like I was talking, about the whole deviations of the range low, and that's why we were accumulating. That's how the market maker fills their positions. It's like it's even impossible for a market maker. Let's say this was going to be a fake out, because some people will still call it like a bull trap or something. It's almost impossible after such a long accumulation to just certainly reverse. Like, how is he going to fill that amount of shorts in that short period of time of pumping? It's impossible. The only reason that we are pumping this aggressively is because we were reaccumulating that long. So if you want to reverse that aggressively, it's not going to be just a random moment in time where you just shoot down. Like, that's not how it works,
Yeah.
So,
and Lars, I'm seeing the same thing with the recent Pepe breakout, where like people are asking me a lot. They're like, oh, like Pepe made new highs. Like, should I take profit? And I'm like, man, Pepe ranged for 8 months as well. Like, I don't think so, man. I think we got a lot of room left. And it's not always 1-to-1, but like looking at Bitcoin down here, we were just talking about, equities and stuff, but just from a timing perspective, it's like, look over here and, 2023, we ranged for, 220 days. And then after that, we rallied for, basically the same amount of time, looking at it right over here. So it's like, you could make the case that like, yeah, maybe we won't rally for 220 days, but like to think that we break out and top after like 3 weeks of rallying, that doesn't make a whole lot of sense to me.
Yeah, the range did its job. Within the range, just chopping people to bits, testing conviction, getting rid of a lot of the late entrants, on the ETF launch. And now it's doing its job where we're finally getting a pump, and people have so much PTSD where like every pump gets quickly sold off. They want to quickly just take their money and just say, okay, I'm done. because they don't want to go through that pain again. So, and that's what consolidation does. It plays a mental game, on your average retail trader, while, the whales or the institutions have been just heavily accumulating. And at the end of the day, it just comes down to, at this point, there's more buyers than there are sellers. It is what it is. Sometimes it's that simple. It's not always a trick. It's not always a schematic. It's just there's more demand than there is supply. Price continues to go up. It's that simple.
And Louis, I would add too that I think part of what occurred during the range is exactly what occurred during the range back in 2023, where you have, there are institutions that are accumulating, but a lot of them are accumulating altcoins, or, the hottest narrative at the time, which was meme coins. And they were right to do that. But what ended up happening along the way is they became underexposed to Bitcoin, which, as we know, when it breaks out of a range like this, not only do you have the rebalancing of 8 months of positioning, but you also, like you said, Lou, you have that psychological influence as well, that causes people to chase. How many wealth management funds do you think are out there right now, after 8 months of probably underperforming the market? And they're the best way, or the easiest way that they can comprehend to do that, is just aping Bitcoin.
Or, Tommy, they're underperforming Bitcoin and they're forced to shove into meme coins to try to get outperformance. Right?
Yes. And we know how small the overall market cap of meme coins are relative to, VC funds, for example. How much of their book, their billions and billions of a book, is made up of illiquid scams that they can't even sell. So they're going to have to shove a greater percentage of their book into meme coins. But as a byproduct of that, like, meme coins are such a small market share, it's going to have some pretty big influence for the overall meme coin space.
Lars, do you have any charts that you'd be willing to share with us today? I mean, that's a silly question. Of course you do. But
Of course I do. I need to
He's
share
addicted like the rest of us.
because in my opinion, this the push that we're seeing right now is still an institutional push regarding on Bitcoin and everything. It's not particularly retail.
and hey, Lars, your mic is okay. I'd give it like a C+. It gets loud and then it gets a little bit quiet. I don't know if there's a setting or anything like that, but
I'm the worst tech guy, bro. I'm the worst tech guy. Like my mics and everything.
it sounds pretty good now. I'll let you know if we can hear you. It's a little like loud and then soft. What's your boy Wyckoff Insider doing right now? Is he around?
Bro, he's in Dubai right now, but I think he should be online.
Hit him up if he's around. We can have him come on too. I know he's on a different. I mean, man, when I go to bed, I see him wake up and like post his setup. It's like, so he's on a different time zone than us. But yeah, if he's around, we can get him on here too.
I just texted him. Oh, he's calling me.
Just copy the link that I sent you, and there he is. There's our man.
Oh, he's going to the gym. He's dodging.
Okay. We'll have him on.
You can join the BB stream if you want to now. Yeah, they have been cooking. Now I'm about to cook. Okay. No worries. No. Okay, he's going gym. He's dodging.
Before you cook, we need to check the like button, Lars.
Yes.
Yeah, okay. All right. So the likes are in. I'd give it about the same grade as Lars's mic, maybe like a C or C+. Okay? Guys, we got Big Lars on the show today. It's been a while. Last time he was here, we were in the range of death. If you want to see the man cook, I'm not going to pull his chart up until we show him the respect that he deserves. All right. We're here for free. We're cooking. We got Big Lars, the composite trader, on today. Pull your phone out of your pocket, get your finger on the mouse, absolutely abuse the like button. All right. I want at least 300 likes before we put Lars's chart up there. All right. We're at 260 right now. We got 600 watching on YouTube, and we got another like 3,000 watching on X. Okay. There's no excuse. Hit the like button, hit the retweet button, or I swear I'll pull up soybeans and I'll denominate it in natural rubber futures. Do you guys want to see Lars talk about crypto, or do you want to see soybeans paired against natural rubber futures, or maybe even cotton candy futures? Because I'll do it. I'll chart cotton candy futures all stream long. I swear. I wish somebody would make me do it. All right, we're 20 likes away, guys. Who's going to be it? See, everybody asks like, oh, I don't need to like it. Somebody else will like the stream. We'll get there. No. Don't ask what someone else can do for the stream. Ask what you can do for the stream. It takes a group. It takes everybody.
I always talk about, input equals output. So
that's right.
Create your own luck by liking that. If you guys like that like button, is basically you sending the universe positive energy, and you're going to receive that back, and he's going to hit 5 bail extra. So everything is going to be better.
We might have to talk about Andy today, man. We're getting real close to some price discovery. All right, we got 312 likes. That's great. Lars, you are up on the screen, man. You guys earned it. Congratulations.
Okay, so talking about Bitcoin, I think most people recognize me for the other streams, but basically what I was saying during summer was we were trending up, coming into this range. Okay, so it was meant to be a reaccumulation range. We were trending up, and then when I trend up, I pull my range from top to bottom. Let me pull on the range. And basically, by this first behavioral point of Bitcoin right here, I was like so certain that this range was going to be a reaccumulation because we were deviating our range low. Okay. And I was like, guys, if you're deviating the range low, you're grabbing all sell side liquidity. People are panic selling. People are breakout shorting. That's how market makers filled our long positions over time to push price higher. So basically, just because we had a range and we were deviating the low, that's why I was talking about a reaccumulation schematic. And we had a model 1 here. So model 1 is basically where you deviate the low twice, each deviation going lower than the previous one. And we got the move up, but price just wasn't ready yet. We had some price capitulation, but we needed way more time capitulation at that point before we were actually going higher. So this the one, we disregard that one, and it went over into a bigger one. So we can see the exact same happening right here, just like we had the 1, 2, and the 3. Right here, we had the 1. We got that deviation of the low, that's 2. And then we got that second one. Again, each deviation going lower than the previous one. And the moment we hit that low, I was like, yeah, that's your macro bottom right there. Because the only reason for price to come lower yet again, the moment we moved up here from the 5th of July, was to mitigate this demand. Like that was the only reason, the only argument that from my perspective, using smart money concepts, I could make. I could be like, yeah, oftentimes when you're in a high time frame range and you're about to do a macro move, it likes to grab all high time frame demand as well. And how I pull my demand is basically I use just the entire sell to buy, leaving that for value gap, leaving that inefficiency right there. And they give amazing reactions. So I was like, the moment we did that, creating that third tab of the accumulation model, I was very confident in that being the absolute bottom. And from there, we moved up, just giving like a quick recap. We moved up, but people were getting too bullish in this immediate move up. And I was talking about how this was looking like a PO3, where this was a range. And then, a lot of people were thinking it was going to be a breakout and we're going to get a higher low for the higher high. But it was basically a PO3 where you have a range, price manipulates above that range high before you have the expansion towards the downside. And that's what we got. But in my opinion,
that was a soul crushing move.
Yeah. That was nasty. That was very nasty. But if people want to be aware of whenever you have a PO3 or a market structure break, the reason why I was confident in this being a PO3 is because you have to look at, okay, what is the market structure looking like and the way that you're coming up. So when you compare market structure, when you draw simple market structure in this range or from bottom to top, you have a low, you have a high, you have a higher low, higher high, higher low, and higher high. But look at the difference in higher low and higher high compared to this market structure break right here and this market structure break. You can see that this right here is a very aggressive V shape with a very extended break. Right here, you can see the way that price had the time it had to take the break structure and the price action it did in the meantime, it's not a break. It's a range, right? It's a very good looking range. This is very good. This is V-shaped price action. That's market structure price action. This is rangy price action. And when you are in a range, you have to watch out for deviations and not immediately call a candle close a break of structure. And I remember me actually giving you guys that deviation threshold. I don't know if you guys remember, but it was like
0.25. I remember it. Yeah.
Yeah. So you can see right here, if you do not close above that deviation threshold, it's still a deviation, and it actually acts really good as resistance. So we were wicking it. We were not closing above it. There was also supply here from an order block perspective. And then we met the requirements. So it was still in that deviation zone. And therefore, I was very cautious to call the break of structure. And another requirement when I want to trade a PO3 is have liquidity underneath you in the range. So when you were coming up right here, these are simply lows just stacking up. You have one low here, another low, which is a higher low, higher low, higher low. And even the tiniest higher lows, which aren't even market structure pools, are just all grinding up. So that's going to be one easy sweep down. So whenever I see that, price grinding up, staying in that deviation zone, actually having a little distribution in here as well, and then coming back inside, I'm like, yeah, this is bound to happen. Exactly this candle. So that was kind of my reasoning as to why I was calling for the PO3, basically the way that we were grinding up and then not breaking structure, staying in that deviation zone. I was very cautious, but in my opinion, I was talking about how probably the sole purpose of this PO3 is to sweep almost all liquidity from the low up in this move. So again, the market maker can fill more high time frame long positions to then move up. But so I was still confident this low was going to be the low, because there was no reason from a liquidity or a demand perspective to go lower. And then I talk always about extreme liquidity, and extreme liquidity is basically the first decent market structure low that was created. So I was just pulling that market structure like this, and this is that first market structure low that was created, making it your like extreme liquidity within the range, if you don't count the range low as a liquidity point. And the moment we swept that right here, and we broke market structure from the top down back to bullish, so you were coming down into that point, lower highs and lower lows. It was at 58.1, I believe. Yeah, or 58.5. Man, the moment we broke this, I turned high time frame bull. I was like, guys, we're going to have a consistent move up to all-time highs. You can play around at the all-time highs before breaking out, but that's when I turned macro bull. It's basically a model 1 flowing over into a model 2, where this is just the higher low from a Wyckoff accumulation perspective. And we got the rotation. Simply, we got the rotation, and we never broke structure coming into that all-time high area. We just continued this uptrend, and then we absolutely pushed through. And the reason why I talk about me thinking this is still like an institutional push is because you can see the volume here increasing coming into your range high, and you're actually breaking out. Like, this is a confirmed breakout, but you can see right here that the volume is increasing on the breakout. And basically how a market maker operates is when you're like sweeping the low, they're not filling market order longs. It's more like limit longs. So like they're limiting in, and the limiting is like a catching net. Like, price is falling and they're slowly catching it until they're ready to reverse it. They probably have all like the data points and the ratios of buys and sells. And then with market orders, they actually can push price. Limits don't push it. They just like catch price falling, and then it stalls around. And then when it's ready to push, they market push. So we could see the volume increase actually here, right? It started right here, that massive volume push. I think there was like also with Trump getting elected.
Was that on the day of the election, November 5th, 6th?
Yeah, exactly. Okay. Exactly that day. So we can see that push, and we can see the push just it increases on this breakout. And there's a difference in a volume increase when you're just about to break out / breaking out, compared to when you've been trending for a longer period of time, and then you see volume start to increase. Because normally when you're trending up for a longer period of time and then volume starts to increase, a lot of people will call it bullish, but then there's something going on there for massive shorts and all that stuff where you have to be very cautious. But when you're seeing volume increase on the breakout, on the few days of the breakout, that's actually really good. That's actually showing that they're even ready to bid price at maybe even that price. And then from there, just going to let it rip up until retail takes over. And then volume starts to increase because retail gets in. And that volume is what they use to start the same range, but then, vice versa into a distribution.
So you've done an awesome job showing us the mechanics of what got us to this point. Now I'm going to put you in the BB hot seat right here, okay? Because although Bitcoin has been chatting, which we love to see, everybody should be cheering for Bitcoin to go to 500K or whatever. That's great. Bitcoin is the rising tide that lifts all ships. Ultimately, Bitcoin gives your altcoins the trigger. But how are you viewing like Bitcoin dominance and ETH BTC? Like, when will we get that long-awaited altcoin dominance rotation? Do you think Bitcoin still kind of steals the show here for a bit, or do you think that Bitcoin's going to cool off, maybe continue to grind higher, but then we get a big rotation into alts? Like, what's your plan with altcoin positioning here relative to Bitcoin?
So I remember me also talking about, on the first streams where I was on, saying to you, like, Bitcoin always moves first. Like, it just always moves first. Yeah. Like, if Bitcoin goes into price discovery, like, you can kind of predict alt season without even looking at any chart but Bitcoin. Because if you see Bitcoin break into price discovery, start to consolidate, start to retrace, making itself ready for the second leg up, man, on the moment you start accumulating for that second leg up, that's when alts go parabolic. That's what it has been doing.
Yeah.
So I haven't paid that much attention even to Bitcoin dominance. I can whip up the chart in a minute, but it's basically if Bitcoin finds its first like tiny topping point where it starts to cool off and we get a slight retrace and we see a reaccumulation, we see it's getting ready to start that next leg up, that's when alts massively like outperform Bitcoin, and you see probably also ETH BTC start to go crazy, which is also a direct indication of alts going and doing really good. So then the question is, where can BTC potentially top out? Because this is not even Bitcoin cooling off. Like, people are so invested on the 1 minute, but like, look at this chart. Like, you haven't had a bearish high time frame candle close. So this is not even Bitcoin just cooling off. This is just literally still going up very aggressively, and you have a range on like the 1 hour. But what I like to use whenever I am in price discovery territorium, it's like I like to use negative fibs to find like potential areas where price could reject or just stall around. And I like to use them for my first high time frame market structure pool. So I think last time, the all-time high was right around here. I don't have it on this USD perpetual chart on Bybit, but like the all-time high was right around there. And if you look at the first high time frame market structure pool coming into that all-time high, you kind of had this low. It's not on the 3-day, but on the daily is valid up until that high. And you can see I like to use the negative fib of this first market structure pool. So let me pull on the trend line so people see how I draw it.
And Lars, maybe let's try one thing, because your mic it's moving down a little bit. Maybe just make sure it's closer to your mouth. Let's just try that to start. It's still okay. All right.
Okay, I'm gonna talk in the mic.
That sounds a lot better. I think you just need to get real close to it like this, and you'll be good.
Okay, I'm gonna talk closer in the mic. So I like to incorporate negative fibs to find targets where price could reject once we are in price discovery. And you can use that like actually for every trading environment. I just only really use it in price discovery. So you can see when we broke out of our previous all-time high in 2020, 2021, that first market structure pool, I'm talking about this one, that kind of can give us targets as to where price could reject starting that second leg. And I like to use the -1 and the -6 point or -618. So right here, if you use that as your generalized area, you can see that was kind of where price started rejecting and topping into price discovery, kind of being your first top. And then we got a very aggressive reaction from that. And then again, right here, when you broke your market structure back to bullish, that first market structure leg back to bullish right here. So you had that lower low, and then you had that breaker structure. Again, that first bullish leg gives you fibs, and then that's kind of your sweet spot yet again, at negative 618. And then you can use that this entire cycle. So right here, you were trending down, lower high, lower low, and then first time making a higher high right there. And then again, making that higher high, you use that sweet spot of the fib, and you can kind of get that negative 618 and 1 as that topping point. And it kind of, even here from this low to that high, which is kind of what happens when you continue this drawing, higher low, higher high, there. You can again have that 618 and that 1 as kind of that sweet spot where price could reject. And now we're doing the exact same thing, but we're drawing it from this most recent one. So if we draw the negative 618 and the negative 1 from that recent one, let me be exact here. It kind of gives you 95 to 109 as like your sweet spot to actually find a range that could potentially break down for that high time frame, higher low for the higher high. So if price starts to come up here, reach this spot, maybe stall around, come down, and you reject from there, and then right here you stall around for that next leg up. This next leg up, and this is not drawn from any timing perspective, just like price perspective, that next leg up, if that's ready to go, you'll see alts outperform by far, because at that point in time you have, I think, 100,000 news articles of Bitcoin having reached 100K and full retail is invested and wants to find an entry to buy some more. And I think from there you'll start that second leg, and I don't know particularly where that second leg will land or will find its topping point, but the range that will start after that second expansion towards the upside, I think that's kind of the start of some sort of high time frame distribution range where you may go higher, but it's actually a deviation and not price trending up. And then all of a sudden you get that reverse effect where people are just left behind because you're making all-time highs after all-time highs, not realizing it was just a deviation after deviation. And then before you know it, it's minus 50% on your portfolio. So that's kind of my thought process. So right here, if you see BTC ready to go, obviously your alts are going to go up. Like your alts have been going up massively on that Bitcoin push, but that euphoric alt season that lasts like 3 to 4 months typically, like that euphoric, like crazy gains, that's typically on that second leg up on Bitcoin.
So we might expect Bitcoin dominance to rise a little bit more. Maybe see a six-figure Bitcoin. Bitcoin cools off, and I'm assuming that would come basically with a cyclical pivot low on ETH BTC, and then the remainder of the cycle from a, using what has happened in the past to extrapolate what might happen in the future perspective, we could see ETH, BNB, Sol, all of our other L1s really outperform Bitcoin for the second leg up.
Yeah, because probably when Bitcoin starts to stall around in that sweet spot zone, your alts are already going to catch up, and they're starting to catch up. But then when Bitcoin starts like the rejection, you get just this leverage flush also on alts. It always happens because then Bitcoin stalls around, our alts start to catch up, and then the slightest rejection on Bitcoin is already going to be like a massive leverage flush on altcoins until they reaccumulate and also go higher. It's always the same because people then, the reason why that leverage flush is so significant is because people see Bitcoin and Bitcoin going up and they miss the boat on Bitcoin, and without even doing any TA on altcoins, they will just open the leverage long on an alt. That's literally what happens, and then that's why you get those leverage flushes that reset open interest for exchanges, funding fees, and then you kind of rebalance again after that.
Yeah.
It's always funny in like peak bull market conditions how wicky some of these altcoins get. It's a great reminder how vaporous they are. from a liquidity standpoint, I remember after we had the huge Bitcoin run up in January of 2021, we had a huge wipe on altcoins back then. And I think ETH went down 35, 40%. DeFi coins wicked significantly lower. That's where some of like the infamous Kraken wicks on DeFi coins that took people out like 75% below market price. It gets insane. We are nowhere near frothiness as far as alt perps go. Definitely not even in comparison to like December or January, for example. Like I'm looking at some of the funding rates. We have seen people, I think, try to long alts against the Bitcoin grain a little bit. Not to a fault yet, but Bitcoin is still leading this market, in my opinion, until further notice, quite frankly. But
yeah, on that dip on Bitcoin, that's like, okay, everyone's longing altcoins just blindly. Bitcoin gets a pullback. Everyone goes, oh shit, alts pull back a lot. And then Bitcoin starts to rally again, and people go, okay, this is a real rally. And then alts really go parabolic with that certainty. Like, okay, Bitcoin is continuing here. Alts are gonna catch a bit. Yeah. It makes sense. And I do know we also have a fib, a 1618 fib around like 110K. So yeah, I do like that sweet spot. You pointed out, Lars, for like a potential local top. I think that like anywhere between 100 and 110, I think is a good range for a potential local or local top.
And I don't know how much you guys care about this, but I feel like either we front run 100 and we top at like 99 and cuck everybody for like 3 or 4 weeks, or we go to like 112 and kind of like really overshoot it.
Yeah. And then get a steep pullback. That would make sense.
So something important, Lars, you're working on right now. Andy on Deck Screener right now is sitting at 302 mil after printing some of the cleanest accumulations that the world has potentially ever seen. Let's talk about Andy a little bit here, man. Let's talk about Andy, Bo Bandy, Fee Fi Fo Fandy, because it's been a long path to get back to the all-time high. And I was talking to somebody about this last night. I said, every altcoin, every shitcoin goes through an 85% pullback at some point after the initial mania, but very, very few can hold that floor and work their way back into price discovery after multiple months of reaccumulation. So Andy is on the verge of joining a very small and elite group of top tier tickers, objectively speaking. So for one, I'm beaming with joy. I couldn't be happier. It's taken a lot of work, to get to this point. Emotions are in check. How you viewing Andy here, man? Tell me everything.
When I first heard about Andy, it was through Mr. Wyckoff Insider, because he I don't know how he found you, but he found you. You had like 10K followers, I believe, and he was talking to me about Andy, but I wasn't into memes at all at that point in time. And he was like, man, trust me, like, believe me. So I whipped up the chart of Andy, and I mainly invested in Andy. It was right here. It was right on this little range. And the reason why I invested in Andy, because after all, I'm a day trader at heart. So if I want to buy a project, the chart needs to look good. Now, I was lucky that the moment I immediately saw, or when I saw Andy, it was literally at this deviation, or again, accumulation. So he told me about Andy, and I bought because I trusted him with his narrative and vision, but the chart was looking good. The chart was just looking good. And it was indeed looking good because we did like a 7x literally from that deviation. But the chart looked good because why did the chart look good in general? Okay, we were uptrending, and I don't care about how good your altcoin is. If it breaks high time frame structure, I still will not buy it. Yes, it can just reverse back up, but I preferably want to invest in projects that retrace 80% but maintain high time frame structure. And it was maintaining high time frame structure here, making a higher low and a higher high. And we just came back for extreme demand. And with extreme demand, I mean the last demand remaining before taking that market structure low. So it bound off this little demand zone in here and it accumulated. So I was like, okay, let me just buy some. This is a good buying price. And then we did the 7 to 8x. I was in love.
I remember that's when we found each other, man. I saw you post that setup down at 50 million. Roughly.
Yeah.
And you came up in one of the Andy spaces. I remember that.
I remember that as well. That indeed. I was like, yeah, the chart is looking good. I'm seeing smart money involvement and seeing accumulations, so that's why I bought. And since then we got the 7 to 8x. And that's when I really started understanding also the narrative, the beta train and the entire thing behind Pepe or behind Andy. And then we got the retrace, but the new market structure low was all the way down here because we pumped so hard. So I knew like, okay, it's the entire market was retracing. So it's not Andy's fault that we're retracing. It's just the majors are dumping. So obviously your lower cap coins are gonna come with it. But we left behind this beautiful daily order block right in that pivot point. I like to call the market maker order block because it's
and here at BB we call them mega demand.
Like mega demand, indeed, yeah. So we had mega demand right here, and I was talking about how they were, it's the exact same playbook. You have mega demand right at that market structure low, which is oh so crucial to not lose. Creating that ultimate fear of like, are we gonna get a deviation or are we gonna get a breakdown? That's the perfect place for manipulation to happen. So we tapped into that and then we started the range and then we got that deviation again. Like this right here, this whole bit of price action where you have your market structure low, you have your range with your tab 2, is the exact same here. You have your market structure low, you have your range with your tab 2. Oh, not only that, like there's no resistance here. There was actually no resistance. These were just highs, lower highs and lower highs and lower highs. Not any like good looking supply or anything to hold price down. No, just highs. So we were reaccumulating here, and I kid you not, Andy had the cleanest Model 2 accumulation down here I've ever seen. Like when on a daily basis, I trade these models, like on the 1 minute even. But can
you tell me what a model, because I know what an accumulation is, but I just view it as like a range with a deviation and a reclaim. It's as simple as that for me. What is this Model 2 you're speaking of?
So can I have,
because I'm like old school with it, but I just view it as like it's like a Wyckoff accumulation or distribution, and it usually has a deviation with a reclaim. Or like as some last cycle, a lot of people just referred to it as like a 3 drive into the low. 3 moves into the low, 3 moves into the high. It's
almost the exact same as a 3 drive. So this is a typical Wyckoff chart. And the way I trade, I've reframed it now to, for example, TCT accumulations. It's basically I'm trading Wyckoff schematics, but Wyckoff itself, it's so complicated. You have many phases, many letter combinations. Like if you try and find a picture perfect Wyckoff chart and you try to trade that, you're going to get very little setup. So I took the core concepts from Wyckoff and then I made them in like this simpler tradable concept, which is now a TCT accumulation, where a Model 1, you can see it here, a Model 1 accumulation schematic. The foundation, the sole purpose of the accumulation is that you have a range low, which is your SC, and then you deviate it once, that's your ST, and then you deviate it twice, where each deviation goes lower, and that's your spring. So that's your 1, 2, 3. Those are the 3 dots going lower. That's your Model 1. And then you can have a quick higher low and go higher, that's fine. But a Model 1 accumulation, the way a market maker uses the range to accumulate, the way they manipulate price within the range for it to break towards the upside, is to have a range and have 2 deviations at the lows. And then a Model 2 is simply 1 deviation followed by a higher low. So a Model 1 is a 3 drive pattern, basically. And the Model 2 is just 1 deviation of your range low followed by a higher low.
Got
it. So that's simply it. So when I'm talking here about Andy, we had a range low, we had our deviation 1, and then we had a higher low. So it's a model 2 accumulation.
Now, question for you on that. So you can see very clearly here in like September 3rd, that high, September 3rd, we had a break of market structure above that September 3rd high.
Yeah.
So at that point, did you know it was a model 2 accumulation confirmed?
Yeah. So indeed, it could always still be a model 1, but indeed, if you start breaking structure back inside your range, a model 2 is more likely than a model 1. So
at this point, how did you know we wouldn't go for that third drive? How did you know? Or is it just you play it there, and if it starts to break down, then you take it on the low?
No, so the exact entry confirmation is what I do is first I have to find like the POI, so the point of interest as to where this third tab can be. That also has a requirement. It's either normally extreme demand or extreme liquidity for your third tab to be valid. So extreme liquidity would be the first market structure low that was created in that uptrend. So this is your uptrend from that second tab low. This would be the first market structure low that was created, making it your extreme liquidity. So therefore, as price comes back and it sweeps that low right here, but doesn't take your main low, it's a model 2. That's what we saw on BTC.
So you're going to try to bid for that higher low. If you get it, great. But if not, you'll cut your loss and look for that second schematic, that third drive.
Yeah. So so when I talked about the model 1 going into like a model 2 on Bitcoin, I meant like you had that low here and then you got the 2 deviations, but it also came back for extreme liquidity. This was your extreme liquidity point. So sometimes it does that, and then you kind of have your model 1 flowing into a model 2. And basically what that means is that they are truly not leaving any sell side liquidity or demand behind.
This was a crazy shakeout, man. This fucking range was
brutal.
Crazy.
Yeah. And then you can expect a lot of follow through. But basically how you confirm, this is very important. How you confirm the model when I tell you guys, okay, yes, we're going to have a rotation towards that local range high. It's when you break market structure from the highest point between tab 2 and tab 3 down towards your third tab low. So you have your tab 1, that's the range low. You have your tab 2, that's the deviation, and you have the higher low, that's the tab 3. But at the moment we're putting in that higher low, I am not sure yet if it's going to be a higher low. So what I just said, what's the highest point between tab 2 and tab 3? That's right here. So I'm going to look at my market structure from that high down towards that third tab low. And if that breaks structure back to bullish, that's when you confirm it. So this is your structure pool from high to low. And right here, you had the break of structure. This is when you confirm that price is going to rotate back up to at least the technical target is always the range high. But, given the context that we were in, we could expect some follow through. But the moment you break that structure from top to bottom, of the highest point between tab 2 and tab 3 down towards that low, you break that back to bullish, you confirm the accumulation. That's why I also set right here why I turned so bullish on BTC when you put that low in. This was your tab 2, this was your tab 3. That's the highest point between tab 2 and tab 3. You measure that market structure from the highest point down. I'm going to skip over these points because they're irrelevant now. You only want the most recent one. The moment we broke back to bullish at 58.5-ish right there, macro bull. Because that tiny break of structure confirms a full-on rotation towards that Wyckoff high, and then these highs were like bound to get taken. And just by understanding that tiny little thing, which is so easy to understand, especially if you already understand market structure and ranges and liquidity, is like, man, you're trading with a correct high time frame bias. Like you were expecting the higher low right here. Could have expected the higher low right there. Right there is like that. This entire bit of price action was extremely easy to trade, especially when you're pulling back. I think UMax actually talked about this. I remember you posting like this 12-hour demand or something where you can get that bounce. I remember seeing you post about that here.
Yeah,
you were talking about.
I said last dip bid here and then above 64K Valhalla.
Yeah, I remember it because I was talking about the exact same, because it was like. It was your extreme demand. So it was your extreme demand of this market structure pool. And I was like, okay, this is going to continue itself. So if it's going to bounce, it's going to bounce from here if we're even going to get there. And we got there, and we got the bounce. So that's basically it. But we're seeing it here on Andy. Like, it was such a beautiful accumulation. And like within a few candles, you got the range high. And then within a few candles, you got a massive break of structure. So now, ignoring the accumulation and just looking at it from a structure perspective, lower highs and lower lows, although this is the lowest point. Oh, no, here. So lower high, lower low, and you went lower. So from a market structure perspective, boom, massive break of structure. And if you try to use that deviation threshold here, it got blown out. Okay, like you blew out your deviation threshold. That was not a deviation. And then it's a simple concept of understanding basic market structure, because this is market structure from the top down. And you have two levels. You have many levels of market structure, but the most simplest to understand is you can have an uptrend, and then you have structure from low to high. And you can also, within that uptrend, have structure from high to low. So I'm going to make it a different color. Quick little educational class. But you can have an uptrend where you have your level 1 market structure. So the most important market structure, that's the uptrend from low to high. But you can also have structure from high to low. And it could even be on like a lower time frame. You can't see it on the same time frame. Now, if you break your structure, your level 2 structure, back to bullish, right here, that confirms a rotation towards your black high, your level 1 high, to continue that higher low for the higher high, since you have been uptrending. So if you apply that to the Andy chart, your high time
looks insane, man. I'm so happy. This looks incredible.
Just pushing all-time highs live. Love it.
All-time high watching party.
Your high time frame structure was just simply a higher lows and higher highs, and this was the market structure low. And then that level 2 structure from the top down was that red one right here. So the moment you broke this after that reaccumulation model, at that point in time, you confirm a high time frame rotation back towards that high. And that's why you could have longed this as a simple higher low play, which was also a reaccumulation model, and now you're pumping to all-time highs. So it's like, bro, like if you show this chart to just without the ticker, Andy, you just show this chart to any person that can do quality technical analysis and that understands it, he's gonna say like you're gonna rip higher to the new all-time high. And then you show this chart to someone that's against memes, but you don't tell them that it's a meme.
Yeah.
And they can do technical analysis, they will for sure buy. Right?
Tell them it's gold or silver, or palladium, or whatever, something that they're comfortable with.
Exactly.
It's all just charts, man. Like fractals and schematics, you can chart them on the soybeans. We do it all the time here when we don't get enough likes. Same reaccumulations, the same retests of demand, the same sweep of the wick. Like it all happens on everything. Same thing.
Yeah. Whether it's market makers or whether it's just human interaction, fear and greed, humans making the same decisions, the same, mistakes over and over again. You see it in the charts. And that's why these schematics become a thing, because humans tend to do the same things over and over and over again. And that's why these schematics become a thing. And, that's what I love about TA is like, Lars just put on an absolute like TED Talk, masterclass there. For real. Like, how old are you, Lars?
I'm 20.
Okay, yeah, like
you're God.
You're killing it. You're crushing it. Like I thought I was young and crushing it. And I'm 8 years older than you, so
I know you can drink where you live, but you can't even drink here in the U.S., man. That's how young you are.
That's so funny.
We're all in trouble, man. That's
but like the thing about TA is like, what Lars just showed, like great. Like he identified that, there was a local, schematic range low likely going to, turn and flip the trend back to the upside. We were looking at something very different, looking at the same chart, but we were looking at it a different way. And we came to the same resolution, right? We came to the same answer. So that's the beautiful thing about TA. There's no one size fits all. It's kind of how you look at things, how your mind kind of, basically works it out and it makes sense to you, and you can come to the same resolution. I think that's great. It's just awesome stuff.
That's why I comment a lot also on your charts, because we have the same setups so many times.
Views,
but you use like, I don't know, like a falling wedge or like a trend line break. and it's like I'm seeing an accumulation, but it's the same conclusion.
But yeah,
it's
same outcome, which is great. And I also love that you said, like these are the Wyckoff schematics. This is where I learned it from. But I took that and I turned it into something that made sense to me, and then I could use, because it's not always going to be ideal. Like that's the thing. I think that's a huge part, because a lot of people, they'll see that and they'll look for that exact. It has to look exactly the same, or else they're not going to play it right. So the fact that you took that and turned it into your own thing is another part that a lot of people miss. Like that's similar to what I did. Just took a bunch of different TA textbooks and just following other traders, and I kind of bundled it all together into something that worked for me. So that's just great stuff.
So let's do this, Lars. So in my view, this chart, it screams destiny to me, and you can't fight fate at the end of the day. All will be even and equal and perfectly balanced within the universe. And Andy in price discovery is the universe in perfect alignment. Now, I know you've got some fibs. What are you expecting here locally? Because one thing that I'm considering here is that you posted I retweeted your chart yesterday. There is a very pronounced and obvious positive correlation between ETH's movement and Andy's movement. When ETH goes up 1%, Andy goes up 3 to 5%. ETH to me looks like it's getting ready to slingshot higher here, maybe as soon as next week or the week after at the latest. Properly applying context to where we are within this larger chart. I know you mentioned like the all-time high is your technical target, but I know you also mentioned earlier applying context and proper backdrop to these schematics also plays a huge role in where you ultimately start taking profit. What do you think is possible for Andy here, given the contextual backdrop of where ETH is, knowing that relationship?
It's for me, I was also talking, or I'm always talking about Andy being like the moment a major just gave the slightest signal of like green light in the market, Andy just ripped. Like it was such a quick responder to bullish news and bullish market environments. So initially, before this pump happened, I was like, yeah, Andy can hit $1 billion. I was like, Andy can hit $1 billion. But then the fact that you're sitting at 300 million market cap before even a euphoric all season is like, I have to reassess after that data. I was like, yeah, if we can, go up with Bitcoin ever so slightly, and then we get an all season and it can rip a few X's, that's nice. But the fact that you're ripping this hard and we're just breaking out, right? Bitcoin just broke out. It's the first push out of that reaccumulation range. It can hit a multiple, maybe,
If you think about it like this too, I do a lot of pair trading. Like my secret sauce, I mean, yours is clearly accumulation models, right? My secret sauce is pair trading. And when you pair Andy against ETH, not just US dollars, you can see that the last time Andy was at 300 million, ETH was 800 points higher than it is right now. Andy is in clear price discovery against its ETH pair right now. So I can only imagine, like, if you get a face ripper with ETH, pushing 5, 6, 7K later in the cycle, understanding this relationship, it's hard for me to not imagine that Andy goes into the billions, like 2, 3, 4, 5 billion under the right conditions,
Yeah, it's the way that it's responding right now. It's definitely giving those multiple billions vibe. I'm always like, I get a lot of questions regarding targets, and obviously it's good to have some sort of expectation of what could happen. But for me, the same way, we saw that reaccumulation rate on Bitcoin, the same way you will see signs of weakness when the time is ready, right? When the time is ready, you'll see some signs of weakness, and then, who knows what that market cap will be. But at this stage, the way it has been responding, this aggressive, because looking at the range itself, like I talked about an accumulation, because it was an accumulation, but it was a 2-tap, right? So you had a 1, you had a 2, and you had a 3. Normally my accumulation models are always 3. This one was a 2. And normally you use the 3 to get like extra fuel. You use the 3 for like the last, few bids. but bro, it was bitten enough because it was a second tap, and then look at that daily candle. That was disgusting. That was
I may be somewhat responsible for the lack of the first tap, so I'll take the blame for that one. Could you enlighten me with some fibs on this? You did it on Bitcoin. Let's talk about some fibs. I have my own, of course, but I'm always curious to see how somebody with a different trading style than me prospects fibs and, where things might go.
So I'm gonna do the exact same thing like I did. This was your first bullish market structure break. This one, so from this low to that high is how I pulled that first negative fib. you're in that spot right now, but
we're here.
we're here right now, but that's
fuck.
Andy is not giving an F. I don't know if I can cuss on the live stream.
No, you're good. Just no racial slurs. You can say the F-bomb, okay?
Yeah, I was like, it's not giving a fuck about this this sweet spot right now. So,
yeah.
So then I normally put a second one. Oh, forex pair. I can't even pull the second. So okay, this is going to be interesting, Max, because I just realized I can't even pull the second one because we don't have a market structure. Like there's no retrace for me to confirm a higher low. So I would really reassess where can this, like, let's say we do something like this, for example, right? At that point in time, you can draw the second fib like this. And then that gives me a good, decent sweet spot. But I don't know where that high time frame, high or low, because I am talking about high time frame. Like you can draw these on like the 2-day, the daily, like minimum daily. Okay. So whenever we get that first high time frame pull, that's where I'll reassess with where the next negative fibs are. Sometimes
do you ever do log fibs? Do you ever put your chart in log and do logarithmic fib levels, or no?
No, I've done it a few times, but mainly because I saw you do it. It's not that I particularly have all the data myself regarding how good fibs work on log ranges.
Yeah, I find the logarithmic, so chart log, fib logs, log mode, I find them to work under the right conditions incredibly well. Like, for example, if you were to put your chart in log for just a second, I'll show you one perfect example. So go to the first range that Andy had back from like April through the all-time high, like right there. Yeah. And if you were to draw range high, range low with a 1.618, and then just throw the 1.618 on there.
Do I have to put it on log?
Yes. Yeah. Yep. You'll see it called the top perfectly.
Yeah, that's clean.
So I'm kind of viewing it as like if you drew that same range now from the all-time high through the bear market low, I think there's a chance that 1.618 plays again. Or some combination of it, right?
Where how far is that?
That's at about $1 billion.
Oh yeah, for sure. I think it for sure does
let's
that.
do this for fun. You're going to love this one. So go all the way back down to the very left in the beginning of Andy. Draw that same range on there with the 1.618, but now add the 2.618 on there as well. So you got your 1.618. Look at the local rejection. Now add the 2.618 and look at this shit. You're not going to believe this. Look at that.
That's clean. Yeah. Well, and then where's the 2.618 of this one?
At the 1.618 of the current range. It's an unbelievable level of logarithmic fib confluence. Look at that.
Oh, that's very clean. Yeah, that's I think that's for sure gonna get hit. I think it will rather be, if I personally had to give like a prediction of like also like market behavior and everything, I think this is definitely gonna rip to $1 billion. I think it has that fuel and that power for sure, especially with the way that we've been acting. Like just look at this, disregard any accumulation, and just look at this rounding up effect. like it's such a clean rounding up effect where you have just low, lower low, and then the lower lows get tinier and tinier until you start making higher lows. Like it's this rounding up effect. I think this definitely has the potential of reaching that fib. I think from there you'll do see a rejection. Let's say you do something like this. I think the problem is going to lay in the fact that we're going to get to that bill. Maybe we start a new range where you can draw the fib again, and people are going to look for the exact same thing wherever that might be. And then maybe from there, you get like a manipulation where you just miss that fib that a lot of people were hoping for. Maybe it's also around like a psychological level, but maybe that's like an area where people apply the same concept again, but now at this time, because the context is different, and you're already longer and in the market and you've already had a lot of gains, you're not going to reach that fib anymore. And you see some sort of a manipulation where the whole narrative is, hey, this has been working 3 times, so it's going to work the 4th time. And then you'll see some sort of manipulation and a pullback.
I love it. Well, this is a great spot to end because we are at our time. Lars, thanks so much for joining us today, guys. I'm going to put Lars's Twitter handle in the comments. All right. If you enjoyed his cook session today, go give him a follow. He's got a lot of great free content as well. So he does streams every single week. I don't know the schedule, but just follow him. His X account is right there. Give him a follow. Keep up to date with what he's doing. Clearly, he's got a lot of knowledge to share. He gave you kind of a sneak peek today, but kind of a fun little impromptu Friday session, guys. I didn't know what we were going to do today. I was like, it might just be an all-time high watch party for Andy. So, Lars, thanks for coming on, man. Really appreciate it.
Great stuff.
Thank you for having me. And I have a mentorship on YouTube, actually. So the market structure and the accumulations, it's like, bro, it's 9 hours just of the most boring but effective educational content you're gonna get. So if people are interested, it's literally on my YouTube.
Yeah, so they can find your YouTube on your Twitter, right? I assume it's
if you press the link, you'll see the YouTube.
Okay. So yeah, guys, check that out. And Tommy, over to you, man. Tell them what's up.
All right, guys. Shout out to Lars once more for coming on Market Check. It was a pretty great Friday show. Cooked you guys up some delicious meals, some alpha, hopefully, before your weekend. But before we can officially send you off, we do need to talk about a few things, such as the BB terminal, right? Which is something that we've talked about, not as much on this week's show, but we talked about it a lot on last week's Market Check. So maybe you're still catching up. It's a great way to learn about these products as well in action, right? BB Terminal is going to be your go-to tool this cycle, right? Whether or not you are an active trader using derivatives, whether you are an investor using long-term DCA calculations, or whether or not you are a degen looking for some improvements on your current tools to be able to continue crushing the trenches, there is going to be a great utility for you out of this product. So make sure to check out the BB Terminal, guys. We were even nice enough to package your go-to tool for this cycle with our Discord. And for those who are unaware, we spend about 4 or 5 hours every single day on live calls with our subscribers. That is not hyperbole. That is legitimate. We care about our subscribers, and we have an amazing community at Because Bitcoin. So maybe you're looking for your go-to community, your go-to tool at the same time. Well, like I said, we were nice enough to package these things for you together, both at discounted rates. So take advantage of that while you still can. We are about to get into the thick of things, right? So you are, if you're looking for that little niche within, a group to find for your, for the bull run, I highly, highly recommend our Discord. And of course, I can't recommend the BB Terminal enough as your tool to use for the cycle, especially as a derivatives trader like myself. Yeah, of course, we also have BB Wealth Management, guys. Maybe you don't want to be in the Discord calls. Maybe you are not quite as active of a trader as others, but you think the team does a great job. and you want us to actively manage your money for you, we do have a solution for you as well, and that is BB Wealth Management. Like I said, it's an SEC registered hedge fund run by the Because Bitcoin team, and we trade digital assets in a way that looks to capture their asymmetric history for upside returns while also balancing the downside risk posed in any financial market. So if becoming an accredited investor or LP is something that might interest you, we do have more information linked in the description below. Finally, we also have the BB Academy, guys. It is invaluable to be able to learn from so many different traders who have been crushing this market in a variety of different ways. And in the same way that you're running out of time to kind of find that community before things really heat up, you are running out of time to hone your educational base and reach trading level mastery as well before the market takes off, right? I mean, there's never a deadline on on education, but it will be most useful for you as we head into a bull market, as volatility picks up, and of course, as opportunity is abundant. So make sure to check out the BB Academy as well, also linked in the description below. If you enjoyed Market Check today, we will be back for another episode on Monday. Typical start time around 11 a.m. Eastern Standard Time. And a reminder that we are live Monday through Friday whenever the New York Stock Exchange is open. Of course, don't forget about Wabi's show as well, Market Talk, which is a Twitter space hosted through our Because Bitcoin Twitter account. So make sure to stay following both Wabi and Because Bitcoin on x.com so you can be reminded not just when we schedule those spaces, but also, of course, when we go live. And Wabi has been crushing the trenches lately. So if that's your cup of tea, absolutely make sure to tune in for his show today. I'm sure he's going to be excited, as always. I mean, Bitcoin's basically in price discovery, so times are pretty great in crypto right now. But that's all from us, guys. We hoped you enjoyed the show. Shout out to Lars one more time for coming on the show. We should have his X account linked in the description of this video. If not, it should be in the comments.
It's actually not, because I didn't know he was going to be coming on today, so it's in the comments. You can see it there, or just I don't know. I retweeted him yesterday. You can go to my Twitter and scroll down like a post or two, and you'll see him. All right, it's not in the description though. Sorry, Tommy, but go ahead.
Oh no, it's okay. It's okay. But thank you guys as always for tuning in. We will be back on Monday. We'll see what the market brings us until then. But of course, until Monday, guys, thank you as always and stay safe.
Peace.